Adani Group's port business is set for a major boom. The conglomerate will soon be adding to its global port capacity. The goal is to expand its port business in the Indo-Europe trade corridor, which is currently dominated by China in places such as Gwadar. How does the Adani Group plan to expand its overseas empire? News9 Plus Decodes. The Adani Group plans to acquire several international ports in the next 2 years. These acquisitions will increase its annual container handling capacity from 600 million metric tons per annum to 800 million metric tons. This mega expansion strategy is triggered by the surging import need for coal and iron ore, export demand for Indian products, and hope for a revival in container business. Through its expansion plan, Adani Group is targeting about rupees 30,000 crore in revenue in 2025 fiscal. So, which ports is Adani eyeing? According to reports, the conglomerate has at least 3 major ports in Southeast Asia, Europe, and Africa on its radar. The company is ready to spend $3 billion to expand its global portfolio. So, what is the current status of Adani's port business? Adani Group is India's largest private port operator. It owns 15 ports and terminals in India. Internationally, the group's port business is operational in Sri Lanka, Israel, Australia, and Tanzania. It operates Israel's largest port, Haifa. It has O&M contracts in Australia and Tanzania and is building container terminal in Sri Lanka. It has also invested in the Philippines, Vietnam, and Malaysia. So, what does Adani's mega expansion plan mean for India? Adani Group has been working towards its port expansion dream for at least 2 years. Its initiatives are in line with India's vision to strengthen and expand trade relationships with Europe, Africa, and West Asia. Greater presence in the crucial trade corridor will challenge Chinese dominance in the Indo-Pacific and support India's infrastructure diplomacy. After all, China's Belt and Road Initiative also follows the attractive trade route.